Welcome to our channel on accounting lessons with worked out problems, brought to you by an experienced accounting professor with a CPA. We have videos on all topics of introductory financial accounting. Our focus is on step-by-step illustration of a problem, worked out on a whiteboard. Each topic also reviews concepts at the end if you need to brush up. Please do not forget to subscribe. The topic on long-term assets and plant assets is illustrated in 3 separate videos, namely 1. Accounting for basket purchase, also known as lump purchase, 2. Depreciation methods, and 3. Disposal of assets. Each video will also discuss the concepts after the illustration. This third and last video is an illustration of accounting for disposal of assets. Take a moment to review the problem description. You will find it helpful to have a printout of the problem for reference, while the problem is being worked out on the whiteboard. Let us begin.
The third illustration is about the disposal of the property after it's being used, or the company may not need the property anymore. So here, if the company has used the property, it can dispose of in different ways. If nobody is going to buy it in the market, the company will just scrap it and junk it. Or the company can sell it for cash. Or the company can exchange with another company as a trade-in. So that's called the exchange. The exchange of the assets, that topic is meant for upper level classes. So we are going to go over examples where the company will junk the property or the company will sell for cash. So here the example is on the date of the sale. So on the date of the disposal, this is the information. This is given in this video. So here the cost of the property is $80,000 and accumulated depreciation has a balance of $60,000. Now here, when the company disposes of the property, this asset account and this accumulated depreciation account should be brought down to 0. So here we have what? The machineries. The problem says the property is a machinery. So you will have machinery account, a debit balance of $80,000, and in the accumulated depreciation, you will have a credit balance of $60,000. So here, case 1, the company junked the machinery after using. That means nobody is buying it. The company is just throwing out. So here, what you have to do for case 1, you will have to credit the machinery for $80,000 and you will have to debit the accumulated depreciation for $60,000. So at this point, the book value of the property is $20,000. So the company is throwing away a $20,000 worthy of the machine. So that would be a loss. So you will record the loss on disposal, $20,000. This is case 1. Okay, this is case 1. Now we go to case 2. In case 2, again, let's go. Machinery will have a debit balance of $80,000 and accumulated depreciation will have a credit balance of $60,000. So case 2 is the company sold it for a cash price of $30,000. So the company is getting $30,000 cash. So what do? You debit cash for $30,000. Then you will credit the machinery for $80,000. You will debit the accumulated depreciation for $60,000. Now there's a gain of $10,000. Why? Because the book value of the property they are selling is only $20,000 and they are getting $30,000 in return. So here you will gain on sale of the asset, you will credit for $10,000. Next one, let's go to the case 3. So this is case 2. Let us go to case 3. So here, they're selling it for $15,000. So here, again, they will debit cash for $15,000. They will credit machinery for $80,000. They will debit the accumulated depreciation for $60,000. Now there is a loss of $5,000. The $5,000 loss is coming from what? The difference between the $15,000 cash and the book value of the machinery, $20,000. They are selling $20,000 value of machine for only $15,000. So here you go to the account, loss on sale of the asset, you debit $5,000. $15,000 minus $20,000 book value, the loss is $5,000.
Now we will review the concepts related to disposal of assets.
Next one is disposal of the assets. That is, getting rid of the asset or disposing the asset after the asset has been used, or when the asset is no longer useful for the company. First method is junking. Junking is just throwing out in the trash. When there is nobody else in the market to buy this property from the company, it will just junk it. The second one is the property can be sold by selling to the third party and then exchanging for another asset. Now the last method, the exchanging for another asset, will not be discussed in this class because it involves some complex rules and those will be taught in upper level accounting classes. So here we will go over junking and selling. Now recording the disposal. So when the asset is disposed, first you should debit the incoming asset or the cash. If the company is selling the machine for cash, then you have to debit the cash account. And then you have to debit the accumulated depreciation for this asset and should bring it to zero balance. And third, you should credit the asset for this cost. Sometimes there may be a loss or a gain in the disposal transaction. If it is a loss, you will debit it, and if it is a gain, you will credit it. Now, loss or gain equals the value of the incoming asset or the cash minus the book value of the asset.
Thank you for watching the video. We hope we were able to help you understand the accounting related to the disposal of assets. We have video lessons with worked out problems on all topics of financial accounting. Please do not forget to subscribe.